Think about the audience of people in Bitcoin that aren't in Bitcoin yet for fear of the state stopping Bitcoin. They don't realize that the state has to run financial repression and destroy their life savings. And if they have a whole bunch of houses, those houses need to be taxed completely differently in the future, or taken back through either force or regulation to be able to keep that state control. So they're arguing about the thing they're scared about, while giving this more strength to the state to be able to take everything they have. It's nuts to me.
Bitcoin's recent upward trend, with a 5% increase last week and a 15% rise over 2 weeks, may not be as promising as it seems. Despite briefly peaking at $64,700, the Bitcoin USD pair quickly fell back to $63,500, signaling potential instability. While some claim this is part of a larger bounce with Bitcoin up 17% since September, the volatile nature of the market continues to raise concerns. Experts like Jeff Booth promote Bitcoin's potential to transform the financial world, but there are underlying risks. Booth's vision of decentralization eliminating gatekeepers sounds optimistic, yet it comes with significant uncertainty. Traditional finance, with its established structures, may be flawed, but it also provides a level of security Bitcoin currently lacks. The promises of financial freedom and breaking away from inflation-driven exploitation may not materialize if Bitcoin's security and decentralization falter. Booth himself warns of confusion surrounding the financial system and the hidden dangers of inflation. But betting on Bitcoin, a highly speculative asset, may expose individuals to even greater risks. The belief that Bitcoin will replace traditional finance remains speculative, and its vulnerability to market manipulation and regulatory crackdowns can't be ignored. Investing in Bitcoin might feel like a safeguard against inflation, but it could ultimately lead to more financial instability for individuals seeking shelter in an unpredictable and unregulated market. Let's watch clips from Jeff Booth's interview for more insights. Kindly like this video, subscribe to our channel, and turn on post notifications for more exclusive contents. Enjoy the video.
I see this taking us to a place where there are no gatekeepers.
Yeah, that is what happens. As long as Bitcoin stays decentralized and secure, that's inevitable. Because if you just play it, and now from there, and I'll tie this back to people that are giving their energy to the system that's extracting their energy and their time, and they're so confused by it. Ask yourself how it is that whatever pieces of paper you're measuring in, how is it you could create wealth by creating an infinite number of pieces of paper, real wealth? Because all that does is makes everything more expensive by the unit of printing of money. So that's the system that most people's labor is within, their businesses within, their savings are within, and they think that within that system, if I buy a house, if I buy this, I'll be safe from that system. And all of those actions within that system are actually making the system stronger over them. They're giving their life energy to a system that's doing that. So if those things are true, right? And Bitcoin doesn't care about how many pieces of paper you can print on it. And I've asked this on many podcasts, but do the same for people who can't grok that yet, can't really understand that. Just today or any day you listen to this podcast, go and look at Bitcoin price versus various different currencies, and you'll see. And instead of saying currency, say pieces of paper I measure the world in, and you'll see all the different relative values of Bitcoin price around the world. And then you'll look at those people in those other countries and go, why don't they see it? Then ask yourself, why don't you see it? And if that's true, if what I just described is true, then wouldn't you want to move some of your time or all of your time and energy into the system that's creating abundance, and take it away from the system that's feeding on your energy? Think about the audience of people in Bitcoin that aren't in Bitcoin yet for fear of the state stopping Bitcoin. They don't realize that the state has to run financial repression and destroy their life savings. And if they have a whole bunch of houses, those houses need to be taxed completely differently in the future, or taken back through either force or regulation to be able to keep that state control. So they're arguing about the thing they're scared about, while giving this more strength to the state to be able to take everything they have. It's nuts to me. The like that when you realize that effectively what they're saying by arguing that is saying, I don't have agency. I have no agency. And what you and I are saying, and what we're saying is, we create the world we want to see through our actions. We all have agency. It's just choice. Now, if you don't believe you have agency and you want to give that choice away to somebody else, then unfortunately the repercussions of your decision are not going to look good for you. We know from a long line of history, if people could cheat and get away with it, they'll win. But trying to cheat an honest network like Bitcoin, you're the one that gets exposed all the time. So it's just a beautiful thing that the best thing in Bitcoin is to act honestly, because it's in service of you and everyone else, and that expands. Now we're really early in that. There's going to be lots of stuff coming at this, but through 15 years, the best thing you could do in Bitcoin is to be an honest actor, and all of the dishonest actors keep getting destroyed.
Jeff Booth argues that real estate currently holds a monetary premium because people use it to hedge against currency devaluation, but this may be a flawed strategy. While houses are seen as a store of value that keeps pace with the increasing money supply, expenses and taxes chip away at that security. Booth suggests that this monetary premium has overshadowed the actual utility of homes, distorting their primary purpose as places where families live and grow. He claims that technology has made materials and production cheaper, theoretically eliminating scarcity, but the reality is much more complicated. The current system, according to Booth, creates artificial scarcity, fueling widespread anxiety and anger. However, the notion that Bitcoin, a highly volatile and speculative asset, can usher in a system of abundance seems highly questionable. Let's go back to the interview and watch more clips to gain insights from Jeff Booth.
Today, real estate has a monetary premium in it, and people are using kind of what we're talking about to defend the monetary premium. So today, in a house, because if you store your money in a bank, you lose money really fast, and at least a house will match the printing of money generally. It actually doesn't match because you have all the expenses and taxes on a house and everything else, and the maintenance of a house. Because if you, but generally it'll match the printing rate of it. So it doesn't have the same debasement as your money. So what would people do is they would use that as, instead of money, they would put their money in a house, and it would attach a monetary premium. And as more people did that, and more big money did that, because they were facing the same thing in the same system, houses, which used to be utility value, where you could raise a family and you have a great neighborhood, turn into a monetary premium and chase us away. And people are measuring that as a house example. And but the utility value too, because of all the technology and and all of the materials in the house, are also falling to the marginal cost of production. So all of the materials inside the house are also falling. This technology is moving, and it's going to be free. From a system of control, that is massive fear, because everybody could do this and create, and so you could have somebody in the backyard in Pakistan create something that kills a massive number of people. From a system of abundance, why would that person ever do that? So you have a system today that is creating the scarcity in people, that they're so outraged that they're going to use these tools to create chaos, that then is going to give the system more control to be able to create more chaos. And you have a different system where you have all of the abundance flowing to people at the same time. And those two systems are they cannot coexist in the long term. One subsumes the other, the system of abundance or the system of scarcity. The system of scarcity is the fiat system, and the system of abundance is taking that over. But that fight and which side you're giving more energy into is a very real, and people are going to get confused. That's why it was discovered at this time. If you look in it, because it couldn't have been discovered without all of the previous work in technology and computers and cryptography and all of the previous work that we just live on top of all of the previous work. And at a time that you needed it, it was discovered to be able to take us on a different path in the future. So all of the things to get to this point probably were required. We could argue why it wasn't the best, but there was no other way. People tried before on gold. They tried before, and they worked for some time, and all of those things got us to this point, and all of the technology and all of the ideas that got to this point that allow us to step off this crazy broken wheel.
Jeff Booth suggests a more subtle approach to assessing Bitcoin's stability by comparing its value across different currencies. He argues that while some worry about government crackdowns on Bitcoin, the real threat lies in financial repression, which erodes life savings. Instead of succumbing to these risks, Booth advocates for embracing a system that generates abundance and empowers individuals like Bitcoin. However, recent market activity seems to bolster Booth's positive outlook. For instance, the Federal Reserve's recent 50 basis point interest rate cut, coupled with optimistic comments about the U.S. economy, has reignited risk appetite among investors. This surge in liquidity has been favorable for Bitcoin, which thrives in low-interest rate environments. As we move into the fourth quarter, traditionally a strong period for cryptocurrencies, Bitcoin appears poised for further growth. This comes in sharp contrast to the typical downturn observed in September. Historically, cryptocurrencies have performed well in the fourth quarter. Data from CoinGlass shows that Q4 returns for Bitcoin have averaged 98% over the past 12 years. With Bitcoin nearing the end of its reaccumulation phase in its 4-year cycle, the market seems to be on the cusp of entering the bull phase, where the most significant gains typically occur. The Fed's rate-cutting cycle timing, good Q4 seasonality, and Bitcoin nearing the bullish part of its cycle all appear to indicate favorable conditions. The 200 SMA is an important resistance level. Bitcoin is testing the 200 SMA resistance for the third time since August. A good breakout above this level might bring a bullish shift and a turning point in the cryptocurrency market, setting the stage for a future bull run. As we conclude, how far and soon do you think Bitcoin can destroy the traditional fiat system? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.